Welcome back, traders. So it has been obviously a very eventful week in the markets. I'm going to take you through that, plus all the potential for the coming weeks. First of all, what I want to do, this is for the week commencing Monday, the 20th of November. We're in that sort of final lap of November and in the run up to Christmas. And, where most of us in the markets will predominantly take a break over that Christmas period. So if you are wondering whether you should stay engaging in the markets, say after December 15th until about the 5th of January, honestly, most people just leave the markets at all levels. So my advice to you is take a break. If you want to study, build your skills, do it, but don't stress about the markets. Don't do it. Don't take any positions before that time. Just actually extricate yourself and just take a breather. Come back in the new year all refreshed and ready to tackle things. So let's have a look at the big stuff coming up in the coming weeks. So first of all, I would mention Governor Bailey out of the UK, just speaking then and seeing if there's any particular mention in terms of hawkish or dovish tones looking forwards. Then we've got the FOMC on a Tuesday, which is interesting. Often that's usually on a Wednesday. And then unemployment claims for the US and consumer sentiment. So for the most part, these aren't really directing the markets per se, it's just giving us some kind of feedback about that. So we're looking for canaries in the coal mine, meaning we're looking for things that are real potential issues we want to keep monitoring. Right now, there isn't anything that's necessarily that bad. I'm going to show you a couple of things in a moment. Then for the rest of the week, there's just flash PMI numbers. So they're going to provide a certain amount of volatility into the markets, but also you've got the IFO business climate. So really what we want to do now is the US economy is looking pretty good. China's economy isn't looking as good. And so the question is where is kind of Europe and the UK, where are we sitting in amongst that? Obviously there's other countries in the world. It's not just about, the US and Europe and the UK, but also where are we sitting in terms of that sentiment? And so that's really what I want to kind of see and focus. But that isn't going to impact my trading because it's not going to necessarily guarantee, it doesn't tell me ahead of time, well, if this happens, we're going to get a trend here or we're going to get no trend there. It doesn't really tell you that you have to, but it does give you some kind of general feedback about the state of the economy. So, but before we do that, I want to show you a couple of things quickly. So the first is that you often hear me complain and moan, and I think justifiably, about a lot of really bad information that's out there. I don't think ever in my lifetime have we ever lived in a world where anybody gets a platform where they can influence people and the filter for quality is just completely removed. So one of the things that I just kind of want to mention as well, this was a string of things that happened on Friday before the weekend. It's just a whole string of major companies have ultimately just had it with the misinformation and the disinformation on Twitter, which is obviously now X. Now, the difference between misinformation and disinformation is misinformation is not intended to provide false information to people. It's accidental. It's just obviously not verified. And then disinformation is intentional misinformations where it's created for the purpose of influencing the way that people think in a really negative way that isn't based in any kind of form of reality. And so this has reached peak levels in the last year, where anti-Semitism is just massively on the rise. There's no doubt about that. There's increases in attacks on people. And this is a global issue. This isn't just in America. This is happening everywhere else. And it's creating divides amongst people. It's polarizing people. And so the clue that it's happening is when these big branded companies are just, we cannot be associated anymore. It's not censoring. It's literally, they just cannot because it's massively on the rise. So I wanted to draw your attention to that. This platform has become almost untenable for the average sane person to try to look for reliable information, which used to be there. It was like the best place to get really good detailed information on it, because that's where journalists, for example, have their own profiles and they would say, this is what I found out and here's all the evidence and kind of think for yourself. And now that's competing with people who buy these blue checks who get so-called verification and then they just propaganda. It's just Russian Nazi propaganda. It's just all over the place. It's really, really bad stuff. And so I'm just drawing your attention to the fact that now what this absolutely guarantees is that the platform itself is going to lose another half of its value. Is just going to drop, and therefore it's going to become unusable. And so everybody's saying to me, well, where do you get your quality stuff? And to be fair, I really like the people that I follow on Twitter. I think they're really, really good, but it's not even so much for trading as it is just for kind of world events and to understand what's going on. The other thing that I think is worthwhile knowing here is that the US is leading the economic growth in the race against China, obviously. And so there was a point where potentially China was catching up to the US. That isn't actually the case at the moment, especially when we go to this. The US economy, this is now confirmed this week, has outpaced invest, obviously, the Chinese economy for the first time in 40 years. This is because of the current administration's reinvestment in the infrastructure in middle America. And don't take it from me, take it from Ray Dalio of Bridgewater Associates. If you want a healthy economy, you need to invest in the middle class. It helps support the lower class. And also you need to make sure that the 1 and 2%ers are paying their fair share of taxes. You can't have the bottom percent paying all the taxes for the country that the upper 1% or 2% are benefiting from and not contributing towards. So this is something that's been changing in the US economy at the moment, is this reinvestment, making sure that the 1 and 2%ers are paying everyone over 400,000, which by the way is 0.6% of the entire household in America fits into that bracket. So they haven't really been paying their fair share of taxes. Under Reagan, they were paying like 90% taxes, and now they just pay practically nothing, very little. And so the goal is to get them, they're using and benefiting off the rest of the population's investment in the infrastructure and then paying the taxes. They need to be able to kind of balance that. So this is just normal basic economics. This isn't, it's not a scheme, it's not a scam, this is not picking on anyone in particular. If anything, the 1 and 2% have had a really good ride for the last 30, 40 years, which is why you just see this massive gap, and the middle class has evaporated, and everyone below the gap is struggling month to month, and then everyone above it has just got so much money they don't know what to do with it. And you can't stay that way, because that ultimately leads to a civil revolution, which is either violent or peaceful. And so that's a guaranteed thing that happens. And so they need to kind of balance that. So actually what happens now is trying to get that US middle, and it is. In just 4 years, it has suddenly started to outpace Chinese economy, which has shrunk to 64% of the US GDP in that period. So this is a great example of just applying logic to a system, to an economy, to keep it nice and healthy. And as I said, this isn't top secret stuff. This you can read about in Ray Dalio's New World Order if you want to do that. This is phenomenal achievement, and this is definitely something that other countries are now going to start to emulate, which is a good sign, by the way. But also don't forget that there's just such a massive wave of misinformation and disinformation. So that being said, you can take this with a pinch of salt as well. So it doesn't always like, well, you have to believe this and not believe that. Take everything with a little bit of, okay, well, I'll need to have that verified. But generally speaking, the data is pointing to this. Okay, that being said, let's go and move on to the charts. I'm done now. Just wanted to point a few things out that I think are worthwhile celebrating, not bad things. All right, so let's start off with the US Volatility Index. Again, it's relatively calm and happy for this week. We've stayed roughly in the same area. So I think for now, the gears, the levers, the gears which make up the global economy today are vastly more complex. There's way more derivatives, meaning systems based off systems of systems, when, 100 years ago, it was predominantly, it's an oversimplification, but predominantly bonds and stocks. So bonds would have been government stocks for want of a better description, and then you would have stocks would be private enterprises. That's it. You could put your money into either. The government-backed ones came with lower return, but way lower risk. And then you got high risk, high return. It was relatively straightforward from that perspective. Today, there's just everything. There's so much stuff there. And so it's complex. But my point is this, is that we can see here, for the most part, the market is relatively calm and happy. If we have a look at the dollar index, what I really like about this from a weekly perspective is we've now started to have that correction now into an area where, yes, we could be achieving, I'm going to use a Fibonacci retracement here, where we might be finding our way back into sort of an area now where it might potentially find some support. I think it's got some good room down to 103. Could it go further than that? Sure it could, but now I would start to be a little bit more cautious. I think there's still more room to the downside, potentially even throughout December, but then we might find that it picks up again in January. But let's just see how that goes for the moment. I want to mention that I like this. Again, we've had a little bit of a momentum close on Friday, so the impetus is still to the downside. So I would kind of put 103.103.50 and 103 there on the on that horizon. And then if you have a look here, for example, euro dollar, if you look at it, it's a different kind of structure. This is clearly range bound, and therefore I would say that it has that room to go to, at the very least, to the top of the range, which puts you at 1.1050, so in that area, maybe as far as 1.11. So I think we've got very high probability that we'll have our retracements, but we still have that potential to do it. This is a very nice continuation candle, so it had a big move, consolidation. We do need to have a bit of a pullback, and so again, that could happen this week, but my point here is that for now, I would maintain, I will be approaching this, not financial advice, this is going to be, my approach is going to be to maintain this bullish stance, at least until we get up to 1.1 or 1.11, and then I'll start to become a little bit more cautious. But you can see here on the weekly we've got that potential to move up to that side. We're now above the 10 and the 20 and the 50 period moving average, so we've got through a big layer of resistance. We're above the 200 EMA here. Again, we're above all of these here, so we've got some room to move there. Sorry, I just had a long sneezing fit. So I'll be looking for that. There could be some pullbacks here. I'll be looking for bullish continuations up to that. Let's have a look at sterling against the US dollar. Also, again, not a bad pullback into the previous highs and a bullish engulfing candle. So in many ways, that is in itself a bullish continuation signal. And I think pretty fair to say we've got some free run up to 1.267, at least up until here. So for day traders, there's some good opportunities. And this could be considered arguably a retracement and a pullback into that trend. So Aussie dollar also looking good. Hasn't quite broken through this level of resistance, but it is a really good start. Based off all of this, this is a range. So have a look here. There we go. We are stuck in that range. So we need to get out of that. But I think there's a fair possibility this is going to certainly try and do that this week. Then we have Kiwi dollar, US dollar. Actually, I want to go back to this because I want to just mark this level here on the monthly. So there we go. I have removed all the levels from it because I need to clean up my charts. I do need to do that. So housekeeping, a good idea to go through and just redraw the things. Potentially that's interesting to me as a possible continuation setup, but definitely a level of resistance here at that 0.6046 area. Dollar yen. So dollar yen double topping range bound. So where the trend has now become range bound. All right. So the question then is, what's going to happen next? Okay, we could see this as a failed breakout ultimately, and we could then see this starting to head down. If we see that happen, it's reasonable to think that that dollar will continue to weaken as well. It's very unusual, certainly in the last 5 years, to see dollar yen going up and the dollar's not strengthening. They tend to coordinate that type of thing. Dollar Swissy looking pretty good to continue down. It's coming into a level here, but once it moves through that, it'll have some room to go down. I would say fairly down to 0.87, so some good room there. And then dollar CAD. Dollar CAD is really battling here because for the most part, there's a lot of general flow to the upside and is battling over that area. So in fact, dollar CAD is one of the ones where I'm just going to exclude an opinion on it for now. I can see that there's both buyers and sellers battling it out. And we'd have to see. We'd have to get real dollar weakness to really push it down because it's got its own thing going on there. All right, let's move on to the metals, onto gold. Interesting to me, excuse me, that this day sort of battle there, we got a gravestone doji there, meaning we just essentially had a bit of failure there. So we had a move up and a bit of hesitation and then a breakout and then immediately sort of a bit of a fail. See, these levels that we have right now are significant levels. For the most part, the weekly here looks good to go. This now looks like it's getting ready for the next step up. So that 2000 levels real, we've got a whole lot of walls and barriers that we need to work our way through here. So extra caution. Unless I was a very experienced trader, I would basically stay out of this until we either break through and then it has freedom to run, or if it is going to come down again, I would trade that. But it's in such an area where it's close to all these walls that the reaction against that makes it very volatile. Silver's got a bullish engulfing candle here on the weekly. Looks good. You can see definite exhaustion here. So what could happen in the early part of this week is price will come back down into 23.41 or 23, build up again, and then finish higher. So if we had that happen, that would be a good signal for the medium term for gold and silver to move higher. Copper, very strong bullish candle there, almost engulfing, but off a strong level on the monthly. So at a definite bullish engulfing on the daily. So a lot of that momentum is to the upside, most likely going to continue up from there. Natural gas continuing back down to this low. You could see I've been talking about this one for ages, and right now it's just continuing down. Still got a bit of that bullish divergence there, so nothing really much more that I could say about that. Crude oil, that's a relatively strong inside bullish candle on this. And so there is now sort of pressure to see this push up a little bit. Again, hinting if that's going to be driven by a weaker US dollar, it's going to boost it, okay? Not inherently on its own thing. So for me, there's a possibility we might see this come back up towards $78, $79 this week, and then we'll see what happens after that. Shorter term, I'm not going to be able to say much more than that, but I will say this is together, these two things show lower low off a level here, plus a bullish inside candle. After all these bullish candles, that is a strong sign, which implies there's going to be at least an attempt to push back up this coming week. Coffee failing a little bit over here, so I think we're likely to see a bit more momentum to the downside for now. We have to keep an eye on that one. Wheat, maintaining that bullish downtrend, certainly near the lows. You can see the bullishness creeping in here as well, so we might see a reversal there. Sugar battling in this area, so essentially just going to stay in this area for now, and expecting not much from there. Cotton is just a mess. So again, I haven't spoken about these in a while because there's really nothing that's worthwhile mentioning in my mind. So let's move on to the MVPs. The indices looking really, really good. We do need to, again, I stand by it, we need to have some retracements. When the market is very bullish, retracements on the daily become, certainly in the last 10 years, I think have become more and more rare. We can see this thing move for a month before it has a retracement. So retracements tend to happen, or pullbacks will tend to happen on that 4-hour time frame. Okay, so that really is something that I often find myself switching to, is looking for those pullbacks on that 4-hour time frame. But I do think we need to have one here. It's just something to be aware of. Principally, I'm bullish. I'm looking for any kind of pullbacks. We won't even connect to the moving averages, but now we're sitting above the 10, the 20, the 50, and the 200. Principally very, very bullish. That monthly candle looking good. We should be able to see some momentum to the upside, but we also do need to have a pullback for 2 or 3 days at least. So any kind of pullbacks for me, any kind of closes below the lows, 1 or 2 red days would for me be worth considering as possible buys, especially if the market then resumes. After that, NASDAQ as well, also looking really good. You can see we just had a big move and we're going through a bit of a consolidation at the moment, similar to what we sort of had here, except the difference is we can't, I say this, as I'm saying it, I hear myself saying this, we can't just keep going up forever. But I have to caveat that by saying we can obviously keep going up relatively aggressively, and the market is looking somewhat bullish at this point in time. All right. The other thing that is definitely historically worth noting, we have high interest rates and we have a bullish market. This has happened before. This is not a sign of the end times, that it's not a bad thing. It happens. The markets used to operate, bull markets in the past used to operate under high interest rates, similar to what they have now. It's very likely that if the market can cope, so hear what I'm about to say, it's very likely that if the market can survive and cope, and in general, people are generally surviving with the higher interest rates, they're going to stay here for longer, whether that's 8 months or 2 years, but they're going to stay higher for longer. So I just think we need to talk about that. They don't get dropped just because the market's doing well. They get dropped if the economy starts to slump. All right, so that would be the motivation, and then of course the markets would continue to do well. So the fact that the markets are bullish right now is not necessarily a bad thing. And again, I spoke about this last week, and I'll keep talking about it. The bottom of the market never seems like a really good idea. It always seems like the absolute worst point. Why would this be the bottom of the market? It's only afterwards, when you look back, that it's really, really obvious. So in this channel, my job is to highlight those moments so that it's not like you couldn't say that it wasn't highlighted to you as a potential bottom of the market. All right. All right, so the Russell also had a relatively good week 4 now. It's in a nice solid uptrend. Let's talk about this. On the weekly, it's the daily. Okay, well, I just mentioned this. On the daily, this has now moved above that 50-period moving average. It's above the 50-period moving average, which it hasn't been above since August. Okay, so that in itself is a bullish sign. That's what I meant to say, and this is supposed to be the weekly chart. So weekly and monthly. The FTSE trying to find that base as well, trying to work its way off that. This is something to be concerned about. What I mean is something to keep an eye on. We should be looking at, if you're monitoring this, we want to be keeping an eye on that, because if we can't break up through that, we are likely to have a break down to the downside. And that's interesting. I got the exact candle that I was looking to see. So we've broken up outside of this consolidation. So again, now the momentum is to the upside there. Oh, that was cool. All right. So that's what I'm looking for. I want to see this break through, this break out of the range. That would be a nice additional confirmation that the UK is also starting to work its way out. This was a really great example of bearish divergence coming in. We had the deeper correction. We're now back up above the 50-period moving average. So again, 2-3 weeks ago, I did a video where I spoke about technically how some of the markets were technically, according to my criteria, in a bear market or had gone back into a bear market. Most of those have now reversed on those decisions and have gone back into a bull market. Excuse me. So that's pretty good. I'll keep an eye on this one. This is one that is still according to my criteria, still sitting below the 50-period moving average in a downtrend. And so this is one that I would keep an eye on. That's the ASX in Australia. And the Nikkei is already picking up. This, we spoke about this as a potential bull flag. Looks like that's pushing off. Looks really good. No doubt there will be a battle at this level here, but it's now had a pullback. Look at this beautiful breakout, pullback, and a nice bullish continuation. So there should be some ability to continue on through December. All right, moving on to equities of interest. So Apple's just taken off. That looks pretty good. Beautiful swing low here. Looks really good. So, excuse me, that potential to keep going to all-time highs. We need pullbacks, though. This is ridiculous to have something like that. And when I say ridiculous, what I mean is the markets are not the same as they used to be. But this kind of thing to just go like that for just sort of 3-4 weeks without any kind of a decent retracement is ridiculous. I'm laughing at the market because the market is doing the kinds of things that they've used to do. So, but it doesn't necessarily mean that it's all a bad thing. It's just that these are the new normals. Pullback into this should work very well for us. Let's have a look at Amazon. I already want to go through these a lot faster. Amazon looking good. Beautiful pullback. Look at this lovely double bottom. Bullish candle goes up, comes back, another bullish candle, and it's taken off. It's pushing through that. So that red level being something that's relatively significant, but it looks like it's going to push through. AT&T is really testing the top of this range. I think it's likely to be able to break through that soon. We'll see if that's going to be this week. ARC Innovation recovering from the lows here as well. Looking good. All right, so that also looks really good. So ARC, the innovation ETF looking good. ASML, which I spoke about last couple of weeks, looking really nice. That's taken off there as well. Let's have a look at Glencore, pushing its way back up to the top of the range, nice and healthy. Tesco's. Oh, so I was looking here. I spoke about this. I was looking here for a momentum candle, bearish momentum candle because usually when you get a set like this, you need one of two things to happen. You either need a bearish candle that's going to break it down to the downside, or you need a momentum bullish candle. So we need one of those two things to happen here. Let's see what happens. Okay, Amex looking good. Really strong recovery there from a monthly perspective. Love it, looking good. Berkshire Hathaway, also lovely, pretty much playing out as per our game plan, but I mean, this would be 2025. That would be another year's worth of stuff. We'll see how that goes. In fact, it looks like it might not even battle it might just keep going from here. So, okay, so then I'll update that when I need to do that. Coca-Cola looks like that's recovering and going back. This is actually a range on this top part here. So when a market is in a range, it actually has a greater than 50% chance that it will be able to work its way to the other side of the range. So what that means is that because it's in a range, it has a greater than 50% chance that it can get back up to the old highs. Hopefully that makes sense the way I've described it. BP. I wanted to see if it would make its way back up to that. We'll see if that's going to be the case. A little bit of a bullish indecision candle. Not conclusive, but again, bottom of these lows here, they might be able to work their way up. General Motors desperately trying to turn around. I spoke about this as well. Bullish divergence. We know when it breaks above here that sentiment will have shifted to the upside. And it is trying desperately to produce that, producing a lot more. Look at that. We've got here 5 green candles within the last 6 candles. So it's like little bits, little seeds and green shoots. We'll see if that's going to be the case. JP Morgan Chase has taken off. Very good. Beautiful. Adidas. Oh, I was looking here for a green breakout candle or a red breakout. We got our green breakout candle. We got it. So we can get rid of this now because I was looking for either a failure or that. And we now have the breakout candle. So that's what I want to see happen on some of the other stuff. Meta continues to climb. I'm going to stop this for now because waiting for it to keep failing here, it's not going to do that. It's had a consolidation breakout. The momentum is now bullish. Morgan Stanley looking pretty good over here. Range bound. So again, greater than 50% chance it's going to make its way back up. So that looks good as well. Nvidia coming back up to these old highs. I really want to see if Nvidia can get out of this. It is still in the danger zone. I maintain this area as a danger zone. And we'll have to see. So when it gets out, then I'll take away the danger zone thing. Netflix looking nice and good. Looking really good, actually. PayPal, little birdie, the little engine that couldn't. So we'll see. But it's trying to turn around. We'll see. Spotify looks good. Also looks good. So this interesting here because a year or two ago, you got a lot of these, well, subscription services complaints and not really happening. Even Disney's turning around. So a lot of these, it could just be that, people are going to spend a little bit more, or they've restructured themselves, and therefore, because subscription services are relatively new over the last 100 years, obviously, they have to tweak the model to see if they can get it to work, and they're doing that in amongst all these other competitors, basically competing for, your cash. That's a very strong reversal signal as well, very, very strong for it to turn around, and it's sort of arguably a double bottom. So that looks really good. So the spider here looking particularly good to me. That's interesting. Okay, so that could find its way to the upside there. There's a lot of bullish signals there. FedEx looks good. I think it was back here when somebody, I forget who, apologies, but asked me if I could add FedEx to the group, and then this is where we are today. So it's actually higher today than where it was back then. Tesla looks good, looks bullish here. You can see high lows, higher highs, looking relatively bullish. Still has a downtrend, but definitely I think once we start to breach through this downward sloping trend line, once you start to get above 300, it's going to work its way back up. So we'll see how it goes. It's basically currently looking bullish, but isn't free and clear, if that makes any sense. Then we've got Vanguard, which looks great. That's fine as well. And then we've got Walt Disney, which also looks really good. So Disney, I can't remember if I said it last week, but I wanted to make a point. Disney was sitting on my list of things to potentially sell because it was so close to breaking this level. Once it's, if you look at it historically, it had really given back a lot of its value over the last 2014, 10 years. And it was really at a level I thought, if it starts to fall through this, it's going to escalate, it's going to move a lot further. And it actually, can you believe it, turned around at in that last kind of area here, just really battled and then turned around and broke to the upside. And now it is giving off very strong bullish signals. It's already back above its 50-period moving average. I can't really predict, and I'm not going to predict where it's going to be 5 years from now or 10 years from now. But I'm curious, could this be a buy that might find its way back up? Could this be like a 10 bagger or a 100 bagger? Could it be one of those? Well, I bought for myself. I've bought it, but I haven't gone heavy into it, which means I'm happy to scale in as it goes. I'm just curious, will this be one of those ones that came back down and then worked its way back up? And the only reason I think of that is because they have everything. Disney has like most of the major content and shows that people tend to watch, the historical cult stuff, like the Disney movies and Star Wars and all that stuff. Just curious. I would love, if anyone has any fundamental or any 2 cents that you want to add to that, put it in the comment section, please. I'd like to do that. Okay, we're wrapping up. We're looking at bonds. Bonds a little pushing back here a little bit, but for now, they're still on a downtrend, and we'll have to just see how much further they move. EURUSD as well. You know what I think could happen here as well? I think it's possible that bonds, because I said the world is changing. What I think could happen is we could find that people just add bonds into their portfolio, not necessarily for the same reasons they did in the past, but more for diversification. And it's not that different from doing it the way they would have done it before. But in other words, people would go, well, I'll have a bit of cryptos, and I'll have some stocks, and I'll have some ETFs, and I'll have some bonds, and I'll diversification. And because they're so cheap, they become very attractive. And if the economy doesn't need them, if your central bank or your Fed Reserve or whatever doesn't need them, but they're still selling them, then it's a good thing. It still looks good on the balance sheet. So it's they talk about the interest rates, central bank interest rates, and so on, because at some point they become attractive because of that kind of stuff. But then they can just become another instrument that people invest in. Touch wood, I don't want to say this, we don't live in wartime, and therefore bonds haven't become something different. Because during wartime, bonds become a very different kind of tool, and we're not there yet. So anyway, so just I'm curious. All right, so cryptos, Bitcoin had a good one. I was really looking for it to break down through this, because right now it's doing very well. But again, possibly we could be, as I said, at the beginning of this next bull leg up, so we're going to see if that's going to be the case. And so it's not really dropping at this time. It's behaving a little bit like a bubble, like it's done in the past, a little bit like that. And that what that means is that it'll just keep going straight up without any kind of normal retracements, which most other things do when their trend is more healthy, like this kind of thing. We'll see. You can see very strong bearish divergence here. So what could happen here is we have a consolidation instead of a correction. I would be very happy to see it pull back down to 30, 31,000 and then just resume. That's all. Just as part of normal breathing out, breathing into the markets. Ethereum is doing it. So Ethereum had a big move and a nice correction. So Ethereum is actually behaving in a much more healthy fashion to the upside, which is okay. All right, cool. So we can see most of the markets are, but they are getting love they haven't had in a while. And there we go. And that's Binance. So ladies and gentlemen, that is it from me for this week. So again, always thank you for letting me kind of just vent a little bit. But for the most part, things are not looking that bad. It seems a little bit less crazy right now. We've obviously coming into the end of the year. And I hope obviously that you enjoy my analysis and it gives you a sense of perspective on the way the markets are, regardless of what we hear in the media. That was really my point, was technical analysis versus influence and bias, which happens. We've got to be careful. Have to separate what we see in the charts from what we think the market should be doing. That's one of the single greatest sources of pain for traders and investors, is trying to reconcile what the market is doing with what they think it should be doing based on what they've been told about it from the media. And, they have their own motivations. But in my experience, the market will do something and then you can work out from that what it wants to do versus what the media tells you. So anyway, blah, blah, blah. I don't want to bore you with this, but listen, have a fantastic week. There should be some great opportunities across the board, a continuation of last week, but there should also be some corrections and retracements. And I want to say to you, have a really, really, have a great week, and I will see you in the next week. Thank you.